Have you ever seen the news and seen predictions of market crashes or economic trouble coming our way and thought, gosh, I wonder if that's true? And if it is true, should I be preparing for something like that? Now, one of the things I saw recently, not too long ago, was this, and it was from well-known financial author. It was just end of last year, and gosh, that doesn't sound good. Biggest crash in history. That's kind of scary. Is that true? Wow, almost 6 million people saw this, and then I remembered, this looks really familiar. I think I saw something like this before. Yeah, I did. It was a little bit earlier, 2023, giant crash coming. Gosh, that's not good either. Should I be concerned about this? But I swear there was something else that I saw that was just like this. Yeah, I remember. I looked it up. Okay, wow, another crash landing, 2023. So what I ended up doing is I ended up searching crash just to see what comes up. And there was this one from 2023, a few from 2023. Back in 2022, that was a hard year when you think about the markets. And yeah, there was a bunch. Then 2021, wow, a lot of things happening there. A lot of gold and cash and silver. It just keeps going on. Back to 2017. I'm just going to fly through these. Wow, all the way back to 2011. It just seems to keep going. And then my favorite, yeah, back in 2011. That's the year to watch out for. And then I wondered, what would happen if I had actually followed that advice? So I took some of these dates and I just wanted to see what it would look like. I overlaid it on top of what the S&P 500 did. And this is going back, one of the first ones was in 2011 time frame, and all throughout that period, and a bunch happening around here. Then looking back, I'm glad I didn't change my investment plan. I'm also glad I didn't sell and put things into gold bars and silver or cash. Take a look at this one of a little bit small here, but I'll zoom in. This is back from 2012 to about 2023. S&P 500, what it's done. Dow Jones, and then there's gold. There's silver. But there is one thing I wanted to go back to, and it's one of the tweets I saw that I didn't understand. Wow, I thought he loved gold. I thought this was what he was a big proponent of on all those tweets. So I wanted to see what he was talking about. So I took a look, and then I found this YouTube channel. Oh boy. Wow, he's getting a lot of good views on these. And it just keeps going. If you've ever seen something like this and gotten worried, you know what? I'll just stop scrolling here. If you've ever seen something like that and worried about it, or just wondered if it could be true, or if you should be doing something different with your investments or with your plan, watch this video, because I'm going to go over how you can help, or how you can evaluate, is it wise to listen to someone, and when it is wise to listen to someone, and when it might be a mistake, or when it could be harmful. And this is all for the purpose of just doing the right things with your money and your portfolio and your retirement. Because as we move into the future, we're going to continue to see doom and gloom predictions, and especially this year, right? And it's going to come from seemingly very intelligent people, or they are very intelligent people. So how can we tell when to pay attention and listen to people, and then when to avoid them? Now, when you zoom out and you look over, the last 30 years, and you see these predictions have been happening for longer than that, well, it could seem kind of silly that these predictions were being made 25 years ago, 30 years ago. But in the moment when it's happening, it can feel very real. I mean, look at the view counts on some of these things in the millions. People are tuning in. Millions of people are reading this and watching this. And you wonder, how can the end of the world predictors and in person be so wrong for so long, for many, many years, but people continue to tune in and listen? Well, I know why. I'll share it in this video. I do want to go over an important fact, though, that these guys and some of the women too have right when they're predicting this stuff. Markets can become overvalued. And we do have black swan events that no one predicted that can really adversely affect markets and the economy and everything, the world. And corrections happen often. And also recessions are a part of the market cycle. So it is wise to have a plan B for bad times. It's wise to stress test your portfolio and to have the plan for all these what if scenarios that could happen. It's at least worth looking at. That's how we've been planning for clients at Streamline Financial for years. And when 2008 happened, when 2020 happened, or whatever the next thing is, our clients were able to rest a little easy because they had a plan B. But we've also seen people that get hurt and they hurt themselves in their financial situation when their plan A is the doom and gloom portfolio. By that, I mean their main investments are just cash or gold or silver or the ultra conservative bond allocation or whatever it might be. And in my opinion, it's not wise to blindly follow and listen to doom and gloomers and position yourself when they make recommendations of whatever the next big scary thing is, right? I mean, we saw the chart of gold and silver and things like that. And I'll show you some reasons why. And then again, I'll show you how to filter when we see things like this and when to pay attention. But as I get into it, as you're watching this, let me know if you like this video by clicking the like button. Really, the goal of this video is going to be to spread some healthy optimism instead of the fear and worry that you see so much out there. Because, there's enough of that in the world right now. So the main reason why I'd suggest not just following the doom and gloom advice blindly is one, it slows you down. Right? When you create a retirement plan, you're creating a plan that has maybe a 6% 6% growth rate or 7% average return, something like that. And then if you plug in the average return of cash or silver as gold, as we saw, you see the success rate go down drastically. So everyone knows this, but why do people keep predicting the crash for all these decades? Now, if you can understand the philosophy behind some of these people, we can better prepare ourselves for success with our own financial plan and also not getting influenced by the wrong message or the wrong people. So let's go over 4 things to remember here. And then I'm going to go over a few of the world-ending fears and concerns over the last 40 years that turned out to be okay. And I'll share why that happens and why I believe it'll continue to happen. So the number one reason is we already know that fear sells. Right? And it always will. It also spreads very fast, right? It's just part of human nature. If you imagine you're walking down a city street and a stranger comes up to you and says, "Hey, see that right at that alley, a little ahead of where you are? There's a guy there, and actually a couple guys. They're handing out $100 bills. Just go up to them and ask them." Well, you'd probably say, "Okay, thanks, buddy," and then keep walking and be a little bit skeptical, right? Maybe you'd even cross the street and not want to pass that alley because that just doesn't make sense. But in a different scenario, you're walking down the same city street, a stranger comes up to you, maybe it's the same guy, and he says, "Hey, that alley that you're walking towards, there's a gang of thugs in there, and it looks like they're waiting to jump somebody. Just be careful." Well, you'd probably believe them. And even if you didn't, you'd probably cross the street anyways, go to the other side or go a different way and take his advice. Maybe you'd even thank him. Now, that's because fear gets our undivided attention. It's just how humans are wired. The second point is these authors and video people and speakers and all of them, they're public figures. They may have become well known because they predicted a crash in the past. We'll often see the prediction or the headlines that say, the man who predicted the 2008 financial crisis says that this is coming next. And we've got others, the next crisis. These are things that get clicks, and they are things that people are interested in. Sometimes we just can't help it. Oh, wow. 2012, wait till gold hits 5,000. We haven't seen it yet, but you're saying there's a chance. So these people, they may have predicted and made a prediction in the past, and they got it right, and they continue because they may be getting paid a lot of money to speak or to write books or maybe to run a hedge fund like the one person in there does, or to sell insurance to protect you from the crash. And number 3, it might be hard for them to go back, right? When they made a prediction, they truly believed it, hopefully. Or they could have been adversely affected some big way in 2008 or whenever the last thing happened that left a lasting scar. And they truly believe deep down that they're helping people. I hope that they do. But whether they do or they don't, they've got a pretty sweet gig now, right? They've got a captive audience. They've got people who will tune into fear all the time. And they're making a pretty good living from it. Now, the next reason is pessimism sounds smarter than optimism. It's actually more intellectually stimulating. That's pessimism is. Where optimism might sound like a Pollyanna, or you're oblivious to all of the real risks happening out in the world. But that's not optimism. Optimism isn't everything's going to be perfect and just fine. Optimism is actually good outcomes are more probable over time. And I've got proof of why that is, and some case studies to share with you. It's because the main reason is because humans have a tendency to project current trends far out into the future, forgetting that markets and people adjust and change. I'll go over a few examples of world-ending things that happen or were going to happen, but they turned out okay. But in a simple analogy here, imagine you're taking the family trip and you're driving to the Grand Canyon, and you're 25 miles away, and you see a sign that says Grand Canyon, 25 miles ahead. Well, are you going to freak out and swerve the car off the road and crash into the ditch to avoid the real fact that there's a huge cliff coming and it's in the distance, you're going to get to it? Or are you going to make a series of adjustments from now until the time that you arrive at the Grand Canyon so that there's less of a chance that you're going to fall off the cliff, right? You can adjust. So let's go over a few real life examples that have happened over the last 40 years of big problems at the time, but humans were able to change their course and it turned out okay. But before I do, if you want to spread healthy optimism out there, click like and maybe share this with somebody that you know, just so YouTube can keep recommending it. I'd love for this message to get out to hopefully bring some of that healthy optimism to more people. Now let's get into some of those things that happen. The big reason why things turn out okay is because that saying, necessity is the mother of all invention. When there's a need, humans can figure out a solution, even if it's the last minute. Kind of like Congress does it. They don't make a decision until their backs are up against the wall, and then they end up making the right decision. But the first one is the population bomb. In the 1960s and 70s, Paul Ehrlich predicted that there's going to be massive famines due to overpopulation. However, advances in agricultural technology significantly increased the food production. And then in the 70s, there was global cooling. You know, some scientists predicted the new ice age was upon us, and that turned out not to be true. But then there was the Y2K bug in 2000. And yes, it's silly now when you look back, but it was predicted that that bug could actually cause widespread computer failure at the turn of the millennium. And there was extensive mitigation efforts that they did and prevented that from happening. And then not that long ago, there was peak oil in the 2000s. The world produced I think it was 2008, we'd have to fact check, but 85 million barrels a day. And the current demand and the growth of the world extrapolated over the next 10 to 15 years, they were predicting not enough oil at all. But because of that, oil became more valuable, and that incentivized people, humans, and companies new ways to get it, which produced more of it, and it avoided the peak oil scare. And then there's also water scarcity, right? Predictions of water scarcity have been mitigated in some areas just through water management and through desalination technology and more efficient practices. And even if it got worse, the incentive to figure it out and to find cheaper ways to desalinate would most likely be achieved. At least that's what I believe. Some of that's my opinion, but there's always going to be new events and new worries and new concerns and things that are going to be scary. So when you see them, do these three things to filter. Consider the source and then consider their motives, right? Number two, focus on what you can control. I'm going to share another resource on the things that you can control. And then three, have a plan B. You know, have a number of years of safety. Let me just draw, you've seen this before, but think about those three buckets that you have. A number of years of safety is a number, I'm making this up, but pretend it's 7 to 10 years of withdrawals in conservative asset classes, things that won't be as impacted by the market swings. And just by the way, this could be moderate and this could be growth things. And again, the goal is having a certain number of years that of income that won't be as impacted by market swings. If you need help doing that, then reach out to me at streamlineplanning.com. But planning this way, that can help keep more peace of mind during scary times, knowing that you have a place to access if some of the equities or stocks or the growth assets are down. And having that number of years of safety can help you not sell those things, those growth assets, when they're down, and let them come back as they always have in the past. Now, if you want to dive a little bit deeper into this, here's a video on avoiding running out of money in retirement. That video's here. And then also, here's the one on focusing on what you can control. And if you like this, please give it a like and then subscribe so that you don't miss next week's video as well to make your retirement even better. Take care.